The IRS code gives you plenty of ways to reduce your taxes each year, but what we're going to go over in this video is probably the easiest way to earn the most money tax-free with the least amount of hassles. So what does that look like? The IRS says that if you're married, you can earn up to $89,250 per year tax-free in long-term capital gains dividends. And so that's dividends that you've held, shares that you've held for longer than a year, qualify for long-term capital gains. And as a married couple, you basically can earn up to $90,000 each year paying zero taxes if this is your only income, right? So if you're completely retired, you don't have a W-2 paycheck, so you can earn roughly $90,000 without paying taxes on those dividends. But the video said that you could earn up to $116,000. So how do we get from 89 to 116? Well, most people forget that you actually get a standard deduction on your tax return. And if you're a married couple, you get a larger standard deduction to offset any other income. So you get a $27,700 standard deduction, right? So you can earn another $27,000 completely tax-free, right? So that means that you will have earned $116,950, right? Yeah. All right, basic math here, guys. In total dividend income, tax-free. So that's pretty close to $120,000, $10,000 a month in completely tax-free, 100% passive income via long-term dividends. And that's pretty powerful because $10,000, that's going to be able to take care of a lot of your just everyday expenses. But the beautiful thing, once again, is that you're not having to sell any stocks to get that capital, to get that 10K a month. You can let that appreciate and ultimately even gift it to your heirs at a stepped-up basis and never pay taxes on that appreciation if you so choose. Or later in life, you can obviously start selling some shares and start taking capital gains then and pay taxes at that time. But having this amount where you know that that's coming in every year, you're getting those checks without having to do anything is extremely powerful from a planning standpoint. Just making sure that you have a baseline of income that's always going to come in. Okay, so how do we get this $120,000? Of course, that would mean that we'd have to be investing a 4% dividend yield. 4%, that's roughly $2.9 million. All right, now I know to some of you that sounds like a near impossible number, but you don't need to have $3 million to pull this off for your retirement. You can start with a much lower number, and dividends tend to grow over time, right? Companies increase their dividend each year, which compounds, and then the share price compounds in addition to that. And so you can start with a much lower number and watch that grow over 20 years to ultimately get here. And we're talking hundreds of thousands versus starting with millions to get to this goal. And of course, you can also try to boost your dividend yield by maybe adding some alternative investments and getting a higher dividend yield. Maybe that's 6%, and that's going to be closer to 1.9 million, which might sound more achievable. And so don't overly focus on this 1.9 number. You just need to start saving money in a retirement account, perhaps one that focuses on dividends here, or one that can be transferred to dividend stocks. Because if this account is in the, call it 250K range, and you either invested in a dividend stocks today, or you decide in the future you're going to dedicate that account to be dividend stocks, over 20 years, that's roughly going to equal that $2 million that you need to then once again get your yearly $120,000, $120,000, $10,000 a month in tax-free dividend income.